Good morning, traders. Richard here doing a quick Ichimoku Cloud chart market update of Tesla. Now, we got the weekly Ichimoku Cloud up here. Now, Tesla's in a spot of trouble now because price action is below this bottom end cloud chart support zone. So that's the new resistance zone, particularly this front cloud level. And any price action below the cloud is bearish. For Tesla to be bullish again, we need to be back above this top end cloud chart support zone. So that's a new resistance zone on the weekly. If we look at that zone there, major resistance zone now, 890. So Tesla needs to break past that zone for us to be bullish. So any price action below the cloud is bearish. But when Tesla sold off, lost support at the top end of the cloud, lost support at 890, sliced through the bottom end of the cloud, sold off heavily, only to rebound from these old cloud chart support zones between 675 and 704. This whole cluster of Ichimoku cloud chart levels, that support zone came into play. The top end of the cloud, 691, was an upside cloud chart rebound zone. So fantastic little rebound on the weekly from these cloud chart support levels. And further downside risk is the bottom end of the cloud here, this one at 641. There's some further downside if the support level fails. Now this rebound trade worked out well because the previous low was tested here in February as well. So we had a nice little rebound from that level. Now turning to the daily Ichimoku, just going to see what's going on over there. You can see this low here, the rebound from the February low worked out well. Had a nice little trade there, swing trade, as it broke through the top end of the cloud chart resistance, then ran into trouble with these old resistance zones there. And that was kind of a key profit taking zone. The old cloud chart resistance levels here came into play, and that was a fantastic profit taking zone. At this point also, Tesla was quite extended from the top end of the cloud. So that was another sell signal to take profit in around these between 1,110 and 1,140 zone. Tesla then sold off, tried to find support at the top end of the cloud, sliced through that, and that was another sell signal, long-term sell signal, as price action below the cloud is bearish. So the last trade to be long Tesla was really at 9. This zone there, that resistance zone there, that was the last time to actually still own it. By 906 was the last long position there, and then that switched down to selling because profit price action below the cloud is overall bearish. And then we were watching with this sell-off, we were watching for these lows here to come into play, these old cluster of cloud chart support levels. You can see this bottom end cloud chart support levels came into play, so there was a nice little relief rebound rally from these levels as we were trading this rebound back up to key resistance zone. So that trade worked out well, long into this mean reversion type of rally, but remember price action is still below the cloud, and that's bearish. And we've got these upside targets, this front end cloud chart resistance of 851, and then the bottom end of the cloud here, once again that 906 and that zone there. These are the upside risk targets for the current relief rally, but it first needs to get through 824, front end clouds 851, and then this 906, and ultimately the bottom end of the cloud. So these are the upside resistance targets for the current rally. But remember, we are trading counter trend because price action below the cloud is bearish. Now let's go take a look at the 4-hour Ichimoku to see what the scenario is there. Also bearish outlook here. You can see how it sliced through the bottom in the cloud here, then rebounded from this 824 zone. There was a nice swing trade there back up to the bottom in the cloud. You can see significant resistance on the 4-hour is now this bottom in cloud chart resistance zone. So the current rally should be okay up until about the bottom end of the cloud. So key levels to watch out for is testing this front cloud resistance. It then needs to test the standard line of the cloud, and then we've got this whole cluster of these old support levels at the front end of the cloud, roughly 890, and the bottom end of the cloud there, and ultimately 954. These are the top end, bottom end cloud chart resistance zones from an Ichimoku cloud chart perspective. So we are trading this swing trade from these support zones back up to the bottom end of the cloud. Just kind of a mean reversion trade because as you can see, we took profits as soon as it got too extended from the cloud. We're now taking swing trades because it came too far away from the bottom end of the cloud. So it's kind of a mean reversion type trade setup. So, but fantastic rebound from this whole cluster of support here. on the Ichimoku, and we can see these levels come from these lows here of September 2021 and October, all cluster, as well as August. These are major support zones in the from Ichimoku cloud chart perspective. Turning to the hourly, will give us a little bit more idea what's going on intraday. You can see on the hourly, the last big sell signal was above the cloud, yeah, and it sliced through the bottom of the cloud. There was a secondary sell signal there, all above the $1,000 level. And we haven't really had a very strong buy signal from an Ichimoku cloud chart perspective. There's a brief gap back above the cloud chart resistance, only to slide back through on the hourly basis. Now, what to look out for on the hourly chart, we can see this rebound from this cluster of cloud chart support levels, which comes from the daily and the 4-hour. We have now broken past the front end cloud chart resistance zone, and we're back above the turning line and the standard line. So the levels to watch out for on the hourly will be this front cloud resistance zone. So it will be interesting to see if we get past 817, and then a breakout past that level will change the outlook from bearish to bullish. So far still bearish on the 4-hour with counter trend swing trades, looking for a breakout past the top end of the cloud, and the 4-hour chart also still bearish, but we are swing trading it from these support zones, mean reversion type trades, back up to the bottom end of the cloud. And then on the daily there, the trade strategy there is also, we've been swing trading these support rebounds back up to critical level. Bottom end cloud chart level, watch out for that 824 zone, the front end cloud chart resistance there, 851, and then this whole cluster of resistance between 906, 890, 906, and 926 on the daily. So these are the upside risk targets in the current Tesla situation, looking at from an Ichimoku cloud chart perspective. Until next time, happy cloud chart trading. Bye for now.